Welcome to Gino Live every day, 1 hour, sometimes hour and a half, sometimes all day. We never know how long we're going to be here. Market sector setup, that's what it's all about. Market sector setup. What that means is this. We're going to find where the strength is in the market. Is it bullish? Is it bearish? What do you think of today? Doji, red candle, double top. We never cleared the double top that we put in a couple days ago. And we're seeing slowing momentum. MACD's about to cross. Are we still bullish? Are we bearish? Or are we neutral on the market? When we figure out where the strength is going, money's coming in or out, are we going to find the best bullish sector or the strongest downtrending sector? Which one are we going to go with? Are we going to go both? Setup. Setup is very simple. We're only looking for one setup here. Every once in a while, I'll take a different one like an engulfing candle. But the setup we're looking for is the Doge on a 20-day moving average or just below it. This is called the payday cycle using Heikin-Ashi and MACD. Nasdaq, that's bearish. You guys see that? So remember, when that first candle, that is averaging 2 days. What's it doing now? It's averaging 3 days. What does the Nasdaq look like to you? We broke down below that support line there, which I'm going to edit, and I'm going to make my drawings like that. In fact, I'm going to make them yellow just so you can see it. And if you want to lock your drawings, you just click this drawing tool pen right here and you can lock it. And what that does, that keeps your drawing tools locked, and you want to keep the same pen in your hand, you click this. Okay, so there we go. These are called internals. This is a 1-for-1 count. It's just telling you how many stocks are down in each index. Then when you look at this down here, energy is strong. Oh, healthcare is strong. Again, defensive, defensive, defensive. Staples, utilities, real estate, and healthcare are all four. When you go to sectors here, healthcare, utilities, staples, real estate. You guys see that? Let me go to my tags. I did switch back to you. So when you're looking at the notes, this will take time. You can't remember this in one day. You start to realize there's defensive sectors, right? There's growth and cyclical. So the main three, which if you're an intermediate trader, you should know. Let's just bring them up right here. You've got growth, which is technology, communications, discretionary, cyclicals, financials, industrials, materials, energy. Then defensive. Defensive are usually your bigger dividends and not quite your growth companies, exact opposite. Utilities especially, staples, things you have to buy, real estate, REITs, big dividend players. Now, healthcare is a hybrid. It's got some growth in there, some biotech, and it's also considered cyclical / growth, but mostly defensive because healthcare stocks, they're almost like a utility, right? But that's the biggest mover. The biggest in each is technology, financials, and healthcare. That's why they're at the top. So I'm looking at this: cyclical, news-driven, defensive, 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 defensive. All the defensive sectors are up when the market is down. But I want to show you this report on Netflix. And I probably should spell it right. There we go. So they reported, and I don't like to get into, sometimes I'll listen to these conference calls. Remember yesterday I was saying, I hope it dips down because the fundamentals in this company are actually really good. But it reported a modest second quarter beat and inline revenue. So revenue was in line with what they expected. And they beat earnings. But shares are trading sharply lower after investors focused on softer than expected guidance. So whether they beat or whether the sales is good, It's the guidance that investors look at. It's a future. It's the future, the guidance, right? And signs that the company's revenue growth is continuing to moderate. Meaning what? It's not really as strong of a growth company as it used to be. Revenue increased 13% year over year, a record $12.6 billion. Now, in 13% year over year, that's better than inflation. Still a growth company to me. And a record $12.56 billion. Not going out of business any day soon. Driven by membership growth. That's what we want. Price increases and higher advertising revenue. Although growth slowed from 16.2%. Okay, so it dropped down a little bit, right? In quarter one. Netflix continues to benefit from unmatched scale, pricing power, expanding advertising business. Investors are increasingly focused on whether the period outside growth is beginning to normalize. Is it starting to become boring like a utility company? While Netflix delivered another solid quarter operation, the slowdown in growth from 14% was enough to overshadow otherwise healthy engagement and better than expected margins. So investors is what they're making this up now. Investors appear to be demanding evidence. They want to see that the company's advertising business, live program initiatives, and content slate can reaccelerate growth. Shares had already fallen roughly 40% over the past year. Heading into earnings, skepticism about Netflix's ability to sustain its premium growth profile. This quarter is unlikely to ease those concerns. So, people want it to be the old Netflix it used to be with incredible growth, and all that. Okay? Now, we're going to come back to this because, by the way, guys, that was an excellent earnings report. You start comparing this to other streaming companies or any company with that matter, you start going, wow. Now, one thing they did mention that they didn't mention in this note is certain people are cutting their subscription and lowering their subscriptions. Why? Budgeting due to inflation. Rearranging their budget based on, hey, gas prices are high. Do I need the one without commercials? Do I need to have the extra one? Because we can't share our... People are starting to budget. So you're going to start seeing stuff like this, I think, in a lot of luxury. I call it wants, not needs. Because what is this? Netflix is communications, but isn't it discretionary? Okay, here's another one. Mixed energy. By looking at this chart, I'll give you 10 seconds. Is this sector equal weighted, gaining strength or losing strength? Here's the 20. Going into the green, very high velocity. RSI, going in the green at a very high velocity mark. 50, coming out of the red. 200, back in the green, never made it to the red. MACD weekly, coming out of the red. Is that sector strengthening or weakening? And how cool is that indicator? Once you guys can read this, you can start predicting where the big money's flowing. So see it right here? The odds are, as soon as this clears this, we're going to start making new highs. And it's news driven, right? So if the news changes, no, it'll kill that whole party. But what about communications? Because what happened? Didn't Netflix... I forgot to look at Netflix. Didn't Netflix really take a beating? Let's go look at it. Netflix, communications, right? See communications? Communications, we just upgraded right here on the daily. Yesterday it cleared. What happened to communications? Netflix, right? So we upgraded communications right here. Is above the 20. And by the way, guys, is it still bullish? It's above the 20. Here's your weekly resistance. Now, this is very, very important because we're going to make a prediction here. I need this to get above the 20. Now, looking at the regular candles, same thing, at possible swing high, right? Possible swing high. Looking at the regular candles, back to a daily. We need it to get above here for me to go back to bullish. So it was doing good yesterday, cleared the 50, gap down to the 20 today. Not good because we had so many earnings on communications. But when you look at this, watch next week, because if it gets above here, I have a feeling we're going to break this. But money's coming out of growth. Is it going to come out of communications too? Now, when you looked at Netflix, back on Netflix, look at that red candle. Of course that's going to hurt, right? And why is that? Because it's an inverse leverage. It does the opposite. So if you want to short energy and you're in a cash account like an IRA or 401k, you can't short. You can buy this stock. It does the opposite. So when energy and the war's over, you go and you buy this stock. It makes money when energy goes down. This is energy going down. This is energy going up. So you can actually short in your IRA by buying inverse leverage ETNs. Pretty cool. Salesforce. Can I say something about Salesforce really quickly? Does this look like it's a bottoming formation? Yes or no? Here's our trigger. I wanted to put this on the fundamentals. Let me hide my face real quick. Keep your eyes on this, because tell me what you think. On the earnings here, the earnings front, is that a good trend for earnings? Yes or no? I don't know if it gets any better than that. And do they have dividends? Shareholder friendly? Yes, they have dividends. Small, but it's a sign of health. Reliable, buying back their shares. And finally, when you're looking at the price to sales, are the sales going up? Yes. Are they undervalued? Yes. Cash flow going up. Look at that big jump. 50 billion higher. 50 billion higher, and the company's down here. Bottom line, we are very close to the most undervalued it's ever been. Good naked put, yes or no? That's why it's got a gold. And you're welcome for that good fundamental find. That's it, guys. So out of 49 trades, 16 or 17 did not trigger, which leaves about 33. 22 triggered where you can move your stock to break even or take profit. 22 out of 33 that triggered were profitable, or at least had you enough move to get your stop to break even. That's 66% batting average. Good or bad on the bullish pick? I think that's pretty darn good with the market going that way since July 1st. Now, we'll go on the bears next week, guys. The bears did pretty good too. Any questions?